Hey guys, alrighty. Hope you guys had a good day trading today. Another super choppy day, boring day. Just not a lot of movement. Actually, really speaking, this was a very, very small movement day. So on ES, we actually only hit 46% of our 10-day average range, a total of 24 points versus our normal 52. On SPY, especially intraday, we only moved $1.63 compared to the 10-day average of $4.61. So that's 36% of the 10-day average. NQ had a little bit more movement, hitting 51%, so 134 points of the average 262. But overall, super tight, small doji day to day on the daily. Next week, looking forward, a couple things to note. Big thing to note is that markets are closed on Friday. So Friday is Good Friday. So futures and the stock market will be closed. So that'll be a 3-day weekend there, and then it will open back up on Monday. Outside of that, there is not a ton going on next week. The big thing on Thursday is we have a lot of data. We'll have jobless claims in the morning. We will get consumer sentiment at 10 a.m., which usually we see on Friday, but I'm guessing because the market's closed on Friday, we're getting that on Thursday. And then the other big thing on Thursday is the JPM collar roll. So Thursday is quarterly options expiration. So for those of you that are not familiar with it, essentially what happens is every quarter JPM has an algo driven protective collar they put on. Essentially they sell some calls, buy some puts, sell some puts. The general theory is that they want to basically see markets close inside that range, and the closer to the puts, the more money that makes. But again, this is just a protective hedge. So right now, my calculations say they're down about 620 million on their position. Now, again, if you think about all of the assets that JPM manages and the fact that we're at all-time highs on most of the market here, they're probably doing just fine. But it is interesting. The biggest thing this brings is volatility. That collar will roll at some point on Thursday. Usually it's around 1 o'clock-ish lately. It used to be super early morning, but now they're doing it later in the day. So generally we're going to see it about 1 o'clock. Sometimes it's as late as 2 o'clock now. But Thursday is going to be a very, very choppy day, so be careful trading. I actually will not be here Thursday. I will be traveling, so just keep that in mind also. But let's take a look at the market here. So on a weekly time frame, we ended up putting a new demand in at 509.52. So really, we're kind of breaking out of our 3-week long consolidation here. This looked like a really nice top to kind of come back down. But of course, because of FOMOC, we had the big pop up. We didn't get the downside. So we closed over previous 513.05 supply. We're still really in our big rising wedge channel here. So realistically, we could see a double top and come right back down here. But to the upside, we're kind of limited to about 529 for next week. Interesting enough, on SPY weekly, we did not see weekly buyers come back either. So again, not really seeing support to the upside. Now on ES here, we're looking at still a rising wedge. It's almost more of a little bit of a channel here though. But same thing, because of the collar roll, or contract roll, we have a little bit of a different candle structure here. So here on ES, you can see we put the demand at 5180 over previous supply of 5140. And actually, this should be right about there. So it's really 5146. Anyways, so, again, big breakout here. This looks like a significant breakout candle. This kind of reminds me of almost this week right here. We closed over this level, but basically a breakout week here. Similar to here also. Actually, pretty similar to this right here, minus the big wick. That could signal that we're going to have a couple weeks of upside for sure. Upside target here realistically is about 53.82. But same thing, we could see a double top and come back down. Now, we did get weekly buyers on ES, but the one thing that I found super interesting intraday today, which I think made it much more difficult to trade today, was that for basically the last 2 to 3 weeks, NQ and the Qs have been the laggard. They have been weak. They have been what's actually been preventing ES and SPY from pushing much, much higher. So what ended up happening today was actually that NQ had all of the strength, and ES and the rest of the market, the Dow and the Russell, they were the weak ones. So today we had a big battle where everybody else wanted to go lower, but tech held so strong. We actually ended up coming up to tech for a while. And then, of course, end of the day, we had the big sell-off. So that's very interesting going into next week, because I think seeing that weakness, and maybe today was just a one-time day of strength, on NQ. If we see that weakness continue next week on NQ with the already weakness here on ES, and realistically, if you look at our ES daily candle, it's bearish engulfing, we're likely to see a pretty good flush to the downside on Monday. So I am looking for a pretty big breakdown Monday, but overall, again, I'm still bullish. Now, going over to the Qs, same thing here. Realistically, for, if you go back to the first week of February, we've been consolidating in about a 20-point range right here. So what ended up happening is we got a new demand at 433.82, bounced off weekly AEMA. Now, we had a double top here at 445.72. We just barely closed over that level. So yes, this is a breakout here because we closed over the level, and this really is a continuation candle. However, if we look right here, we have an almost identical candle, and then that led to the double top before we go lower. Same thing here on the Qs. We do not have the weekly buyers, so it is difficult to justify playing further upside. So if we do break out, though, we have a pretty strong target of 458 area. Now looking at NQ, once again, we got a new demand at 18,050. Same thing here because of the contract roll. We had a 3-week-long consolidation that we've broke out of. Nice bullish engulfing candle here. So same thing, our upside target is really about 18,965, and then about, about 19,155. So the issue here again is the same thing. This wick to the upside here is not really a strong continuation candle. This is more of a double top come back down candle. But again, we do have weekly buyers that did briefly come or barely come back in here at NQ. But again, the same thing, the last couple weeks, NQ has been the laggard. So if NQ continues that lagging next week, we are going to get a double top and we're going to come lower. So I'm still looking for weakness on Monday. I think Monday is going to be a weak day, and then we'll kind of see where the trend goes for the rest of the week there. But I am looking for some downside. Now, when we go over to the VIX here, we have these interesting back-to-back doji candles with long wicks to the downside. Again, I said yesterday, 12.43 to 12.79 was critical and super strong support. You see, we held that very nicely. So now we almost have a double bottom here at 12.9 on the VIX, and this looks ready to pop to the upside. If the VIX gets that pop on Monday, I kind of thought we would get it today, but we ended up not getting it. So if we see that Monday, that's where we're going to see that market weakness, and that's where I do think we get the sell-off on Monday. Going over to oil here, we're kind of just chopping. Basically, every week we put a new supply in, and then we put a new demand in, then we put a supply in the demand. Kind of in this weird sort of up channel right here. We got two different potential bull channels that we're looking at right here. We have the red one that's a little bit more aggressive, and then we have the yellow one, which is a little bit less aggressive here. One thing that I'm watching is that we ended up getting a bigger doji candle here. So this is a topping candle. So with this doji with 80.98 as our new supply, we actually are looking for a move back to 76.33 to 77.77. Going over to the dollar here. So we have been in a downtrend, and this goes back all the way to October. And again, when did our 5-month rally start? October. So using that October candle high, this is the week our rally started, and then also here on February 12th high, you can see we had a downtrend. We broke through that this week on the dollar, and more importantly, we closed over 104.28 supply, which was the weekly double top from back here in mid-February. So the dollar, as of right now, is seeing a major breakout, and we're going to target the 105.8 area here. So with the dollar breaking out here, and I'm seeing again some weakness for Monday, we could see that bigger flush. Now going over to the 10-year here, a little different pattern here. So we are still in our downtrend, but if you see here, we've been uptrending. If you go back all the way here to the really middle of December, we've been in an uptrend. So what I'm watching here is that we actually put in a new double top on the weekly at 4.309%. So we're sitting back here right at basically our midpoint of 4.189%, which is the weekly 8 and 20 EMA support. So we could come all the way back down to 4.074% demand, but I'm going to be looking for a double bottom and a push and breakout over 4.309, which again should bring weakness to the market. Now looking at Bitcoin here, we put our 6.69K supply in last week. We came down. Same thing here. We're still not quite where I would say a big sell-off is coming in, but the daily of Bitcoin does look fairly weak and not very bullish going into the weekend. Last week in crypto was pretty weak, so we'll see what that brings this week. I am looking, once we kind of lose maybe 58.9, we could see a bigger drop down into the 40s, but I hope you guys had a good week trading. I will see you guys next week.